All right, ladies and gentlemen, welcome to the High Performance Trader Discord recap, right? So today we're going to be breaking down really deep, extensively, not only into our edge, right? Not only into what we look for every single day to put on trades, right? The risk reward, the strategies, the TA, the PA, anything. But I really want to dive deep into our ability to remain objective, right? So me and Darren were just talking right before we started this, and I think it's really important that we break down the conditioning we have put ourselves through years of failure, through years of trying to learn to become good traders, right? We've conditioned our minds to really be anxious and fearful and trying to predict what's going to happen. And what this does is pulls us out of our objective mind, and then we become subjective. And this is much harder to operate out of. I'm sure a lot of you understand, right? When the bell goes off, the anxiety kicks in. Do we go long? Do we go short? Do we just chase it? Do we not, right? So my goal today is to really break down and have a really good discussion on what we do, what we like to do, how we like to do it, so that we could remain in that correct moment, that present moment price action, right? So it was a really crazy week. We had tons of news. We had Powell on the mic. We had tons of volatility. Yet our critical levels kind of showed us the way to trade, where to go, and put on some really good trades. So welcome, everybody. I'm super glad to have everybody here.
Going to be a good recap. I'm excited to get into this week.
I know, me too. This week offered a lot of opportunity. I spoke to a lot of traders. It was pretty challenging. I just made a video I dropped on YouTube of what to do when our strategy is invalidated, right? What to do when we have a beautiful setup like we did over here on Monday or Tuesday. I'm sorry. Perfect open below previous day low. Price comes right into previous day low. Sellers show up. We take the market short. First target, 43250. Second target is, what is it? 43195, right? So this right here is a beautiful example of our edge, right? We open below previous day low. Sellers defend it. I mean, look at this. This was textbook. And then the open gets defended, right? Buyers show up at the open. Boom, causing us to stomp out. But what I love about this is insanely bearish, right? This scenario in front of us is insanely bearish. But once it gets invalidated, everything has changed. This right here tells me buyers are in control. This right here tells me the gap fill is in full effect, right? We were able to stop out of our trade very quick and re-enter on longs, capturing a beautiful trade up to end of day, even up to previous day high. And then you can see once we got above previous day high, right, which looks very bullish, large money does the exact same thing, invalidates the structure, and then we get a beautiful sell-off right back to those levels, right? So this is going to happen all the time. I'm sure this was probably pretty frustrating for most people. It was for me. But just to be able to remain present and subjective, like we were talking about in the beginning of the intro here, the open painted a story. I mean, check it out. Buyers showed up, defended the open once, twice. We came in a previous day low. I would take this trade 100 times over, by the way. So if you took this trade short, you were trading the edge properly. You know what I mean? This was a beautiful example of the trades I try to take every single day. This right here is a $1.20 move to the downside. I think I was up almost 80% on this trade. I actually added to my position right here with the break and retest off the open. But what adding was allowed me to do was set a clear stop out right here above 433. So if price got above 433, I was going to exit out of my position. And then you can see we came up, retested it. And then right here at this candle at 10:04 a.m., buyers defended that open beautifully. I mean, look at that. And Darren, that is exactly what we talk about when we talk about present moment price action. Look at that.
Yep. Yeah. Another thing about this day, because I also went short, but we have these strategies like the gap fill up to the previous day low, which in this case that was, and then we also have the gap up to end of day. So those are two different gap fills.
Yes.
Both of them are possibilities every single day. And if that's what happened and you took that trade, you should be willing to take that again in the future, because
100%.
This game is not about being right. In this case, we were right initially, but then we had our stops in, and basically it stopped us out. Maybe for a small loss, maybe for a small profit, but that allowed us to then look towards the next opportunity, which was the next gap fill all the way up to end of day. So yes, we were right on this trade, but that's not what we were focusing. What we were focusing on was if we saw continuation and if we got stopped out. We did not take that personally. We did not take that like we were wrong.
No.
We just made a move on a trade, and it either was going to go our way or it wasn't. And those are the two options. And trailing stops is what saved me. Or sorry, hard stops is what saved me here too.
Yeah. And that's the thing, right? Like, I can't help but, stress the fact that being right is not the way to consistency. Being correct on every trade is not the way to consistency. Yes, obviously making money over and over, we can't affiliate making money with being right. We cannot control the price. Only thing we can control is our entries, our exits, our vulnerability, our stops, right? Okay, so being right to me is following my process entirely. I don't even care if I lose money. It doesn't matter to me. At this point, the trader I'm trying to become is completely and utterly unfazed by price action or the outcome. It's, hey, did I follow my process? And in this scenario, I did 100%. It even came up for the retest. Okay, I went short again. I had lower targets going much further. So this was a beautiful risk reward ratio. This is just an example of what large money will do to accumulate liquidity to maximize their moves. And it's not our job to outsmart large money, not at all. It's our job to understand what they're doing. And that's why I love when I identify a strategy and then it gets invalidated, because instead of taking this the wrong way or personally, like Darren said, now we're using this as, okay, right here I'm 90% bullish, right? Going back to probabilistic, right? Probabilities. I'm 90% bearish in this scenario. I'm sorry. 90% bearish, 10% bullish. Now this happens. Boom. Now I'm literally 90% bullish, 10% bearish. So it's like, you need to be able to be super aware and present, right? And the way we do that is these levels, right? I mean, I'm sure most people could attest to this from being on the Discord. The more you trade just price action at these levels, the better results you're going to see. I mean, this made perfect sense to me when I seen the open. Once I seen this candle, I was like, okay, this is now a bullish scenario. And that kind of prepped me. Once again, the hard stop taking care of me getting out of the trade. This preps me because right here, I know there's a very high chance I'm going to get stopped out. That's fine. What's next? And I literally wrote in the Discord at 10:06. I'm like, okay, targeting the gap fill. I said stopped out, broke even. Targeting stopped out, broke even. On to the next, which is my favorite forwards. On to the next, right? Don't care what happened. Doesn't matter. Objective mind, not subjective. Don't care. On to the next. And that what that does is keeps you completely open to this, right? And then you catch a beautiful move to the upside right into end of day. And you can see here, structure held beautifully all the way up to previous day high. So yeah, just this. I love this day because it just showed beautifully. It showed a perfect example of what happens when trades get invalidated. So,
HPT pattern.
Yeah, right here, right, Todd?
Yeah, they open right at 9 o'clock. When it made that a week low, I call it a weaker low. It's not going
right here.
I'll mark that top right there.
Yeah.
Yeah, the top of that red candle, and then once it blows by, and it did do a retest, but
It was super
It was
fast.
quick.
It was super fast. That was my
I was about to ask that question. Just like there is no retest. Like yes, that is completely bullish. There is no doubt about it. Buyers are showed up so much.
Yes.
Aggressively, but there is no retest of. I was waiting for that retest.
So
like 433. Yeah.
So that's actually
that didn't happen at all.
That's actually a very good point. Now for us to understand, right, how to go forward, we must understand there's the market. We need to be like water, right? We need to be formless. Now, I'm not going to sit here and tell you to take trades without retest, but what I am going to say is if you have a clear understanding of who's in control, and you feel like putting on a trade, and you can still identify where to stop out, there's nothing wrong with entering a trade with short size, as long as you can see clearly what's going on here. And if you're not comfortable with that, that's fine. Because that actually happened. It's hard to find a good place to get in. These are 2-minute candles, and these retests are happening within 30 seconds. And we run into this a lot. And the last thing I want us to do is miss the moves. But one thing I've realized is in the morning, the open, right? Now notice how sellers, this is how I do it. Notice how sellers defended the open print beautifully, right? Sold, retest, beautiful. Even with the volume, look at that red volume. I was like almost 90% convinced this thing was going to sink. Okay. Invalidated. This has been my go-to lately, and we're going to go through a bunch of examples, right? Is when the critical level, being the open, is defended or validated. Now, right here, boom, invalidated. When that shift in market conditions happen, that right there, guns off. Okay, now we're bullish. Where can we get in with tight risk? Like how Todd does it, right? Is he'll once price rips up past this, he'll enter, but his stop loss is still within reason. You see what I'm saying? So it's like we're gonna be presented many different scenarios in the market. You guys know how much I love that retest. That retest symbolizes so much. But at the same time, when these levels get invalidated in such a sharp and fast way, we're not always going to get those clean, buttery, perfect setups. And if you're and I'm not saying take them. I'm saying learn to understand what's happening. And as long as you can put on a trade with proper risk, you are trading your edge. So that's how I kind of feel about it.
If you put that trade on, I think there's two different ways to approach that trade. If you approach it from a way of thinking that you're chasing it, and then you're much more likely to not hold that trade all the way to continuation.
Yes.
You're much more likely to stop out when you see one red candle.
Yeah.
However, if you approach that trade coming from the position of, I can see the strength at this level, I can see that I have a critical level here at end of day, and I can see that buyers will defend that level.
Yeah.
You're much more likely to hold that trade when it retests. So there's two different ways to look at it.
Dude,
one is setting you up for success, and if it does come down and retest, you will be able to stop out because you know that that's not the strength that you were seeing. So I think if you come at it from a point of view of thinking that you're chasing it, you're just gonna mess it up.
Dude, Darren, you said that.
You know?
You said that so perfect, Darren. That was beautiful. It's literally all comes down to how you're viewing it. You're 100% right. Like
agreed.
right.
You're 100% correct. Yes. Like if I chase that one, if it retested, so my emotions will get faded out, and then I can exit out like
that.
The loss.
That is the definition of objective mentality. That is present. That is mindfulness entirely. And you know what I love what you said there, Darren, is that we've identified end of day as the target, right? So we're playing two scenarios here. If buyers show up based on our past and our experiences and all the market imbalances we capture daily, right? Based on that information, if buyers defend the open, and invalidate PDL or previous day low, then it only makes sense to target end of day. You know what I mean? And viewing it that way just makes it. And now you're in a state of you're viewing it in a completely like subject or objective mentality. That was perfect.
Yes, indeed.
I actually
it helps me a lot too.
Go ahead, Todd.
What helps me a lot too, what helps me a lot on these HPT pattern trades, in real time, if it chops up to that little pivot, to that lower high, I'm probably going to wait for a reach. If I see a strong bar explode through it, I'll take it there, and if it comes back and retests, I'll add back to it.
Yeah.
Too. So, but sometimes that retest was so fast, it went.
Yeah. Well, and that's the thing, right? So yeah, I got stomped out of this trade right as this ripped up, came up. Once I seen this candle was red, right? And once I see it suck up, I'm in the trade. My stop is literally below the wick, and that's it. Like, once again, it's our job.
Yeah.
It's our job to do one thing, make money, right? Now, to make money, we must identify market conditions and adapt. That's it. Identify who's in control. Is it buyers or is it sellers? We do this through critical levels, right? Open, previous day low. Now, we do this by seeing what happens at these critical levels. I mean, this is a perfect inverse head and shoulders, and this is just a break and retest. Okay. Now, at this point, I understand, right? When the market looks like this, I understand entirely who is in control via buyers, and I'm willing to put on risk, targeting end of day. Now, what happened to me on this trade is this ripped up. I actually had a very good entry. Price rips up. This is $1. This is almost a $2 move here, even though it doesn't look like it. But I put my hard stop in, and I literally got stomped out right here. Boom. Am I upset? Absolutely not. You know what I mean? This is the game we play. And I would rather lock in my profits. Could I have placed my stop in a better place? Absolutely. Am I going to let that scenario affect the next move? Absolutely not. Because, yeah, I got stomped out of this. I made almost 100%. I could have made more. Instead of being frustrated, I'm like, okay, end of day's next. What do we have to do to get here? We rip, right? We come down. Oh. And then we rip right in the end of day. And now, once again, I'm being completely objective. I'm not predicting anything. I'm letting all this happen. I missed all this going up. Not upset. Because once again, what I did here was use previous day high as a perfect canvas again to understand sellers were taking control of the market, where I then took the market short here and made another killer move to the downside, right? So I just really want to talk about how these levels, yes, they get validated here, right, at previous day high. Now, instead of just hopping back in this trade, what happens if this gets invalidated and you could take her short and catch the flush all the way down? You know what I mean? Like learn to use your levels. Not the first, once the first time you see buyers defend them, don't just go long. I mean, unless you want to, but I guess what I'm trying to say is just be open to when they get invalidated. This was a perfect example of that. And both times,
if you did take that long off previous day high, I wouldn't fault you at all.
No,
because that is playing with conditions. That's playing with a critical level. Like, if you took that trade, I would probably take that trade again.
Yeah.
I think, yeah. But what you're saying is just be able to see when that structure is breaking.
Yes.
And if that ends up being a losing trade, don't doubt the strategy. That was a great play.
Yeah.
You got out at structure when structure broke.
Yeah.
That happens,
Yeah. I just love seeing them get invalidated as well. They offer great opportunities, and once again, what this does is keeps your brain opened and aware, right? Like we were talking about in the beginning, right? We want to be objective. We don't want to be subjective. Subjective meaning.
Josh, you're breaking, Josh. Josh, we are breaking. I mean, your microphone.
Oh, am I breaking up a little bit?
Yeah.
Okay, hopefully that stops.
Yeah, now it's good.
Okay. All right, cool. Yeah, so yeah, that was Tuesday. Wednesday was a really challenging day as well. Now this was the, and this is what the market's going to do, right? You're going to be presented challenges, right? So let me just move all my critical levels over real quick. Because in this recap, I really want to show you guys how I really go about understanding market conditions, right? So we have end of day here. We got previous day high. Okay, perfect. Okay, so this was how I went into the next day, right? So once again, the open is always like the open's my best friend, right? The open shows me a lot, right? The open print, open candle, it's gonna show you a lot. And I've spoke with a lot of traders recently, and a lot of us have found trading off the open really helps us understand who's in control for the day. So the way I went about this day is we gapped down, and I had upside targets of end of day 43606, 43811, right? Easy end of day, previous day high. So the way I was looking into this is if buyers, because I was really bearish initially because sellers kept defending the open, and then buyers came through, ripping up past the open. So I drew a little intraday level, which I think are some of the most important levels. So, we get a lot of questions about like, where do you find these levels, right? And it's like, I don't know them until they happen, right? Like, once again, it's all about being objective, right? Being like water, formless, right? Like, we don't know until we see them. And then as price reacts to these levels, you're going to be presented beautiful opportunities like this one. I'm like, okay, I'm going to take the market long here. Rip, comes down, retests somewhat, go long, boom, get stopped out very quickly, right? So this, once again, is, and right here, I thought for sure this was a slam dunk trade. I'm like, this thing's going to rip right to end of day, right to previous day high. This is a beautiful setup. And it just goes to show, right? When they get invalidated, look how good. Look at the sell-off we ended up getting. So it's like, I'm not trying to confuse everybody here and like go like, oh, we trade the break and retest. What are you talking about? All I'm trying to say is when you have a hard stop and you're approaching this with correct position size, when the strategy gets invalidated, it's still telling you a story you can capitalize on, if that makes any sense. It's like understanding the overall conditions of the market. Right now, they may look bullish, but once they get invalidated, this is going to open tons of opportunity for you to then take the market short to previous day low, right? So this was another perfect example of that. But it was this was
a great example of how you absolutely need hard stops as soon as you get into your trade. Because, Monday or Tuesday was that day when we ripped up with no retest. And if you didn't spot the tiny little pullback on the 2-minute candle, you weren't getting in that trade. So if you were coming into that day with still stuck in the mindset of the other day, you would have entered this trade here, which I did. This is where I entered my trade, but I had a hard stop. And if I didn't have my hard stop, I would have got absolutely cooked on this trade.
Absolutely.
Because you can see how quickly it reversed. So basically, there was a lot of people wanting to go long as soon as we broke that high of day. And likely they didn't have hard stops, which is why they stopped out providing liquidity and fueling that move down. Yeah.
This is great example, Darren. Yeah, you are right. Like I would be bullish at that point. Like when it broke.
And then boom.
Especially with end of day that close, because end of day wasn't that far off, and that's a pretty classic gap fill right there.
Yep.
But the only thing that's guaranteed when we get into a trade is that something will happen, and that something happened to be some red candles.
Yeah, absolutely. I mean, look at the open.
This week I learned perfectly this one. This week, this is the best example I learned.
Yeah.
from you and
Well, look at this, right?
Yeah.
The open is
that's it. Like, we are out of the trade.
Yep.
Yeah.
Hard stop, and what that does is open up your mind to be able to then go, okay, if I was wrong here, how many other people were wrong? A lot. Like, you know what I mean? And now this is going to introduce the idea of waiting for large money to show their hand in trading with them. I mean, it's a double-edged sword. It takes time to really, get used to, like, that objective mind. But it's like, we're going to see this a lot. We actually did this on CPI day when Powell was talking, and I was able to put on a killer trade because I was able to see right here. I was able to see structure form.
No, we'll come to that, Josh. Like, now I have a couple of questions.
Okay.
There, so,
yeah. Okay. Yep. Let's go back. My bad. Yep. Go right ahead, buddy.
We'll finish Wednesday thing. Yeah.
Yeah. So this was Wednesday. Now that beautiful move to the downside. I did not put on any other trades.
Not a great setup though. Anyway.
No.
Wednesday is very tough.
Yeah.
I didn't see anything great this day. It was frustrating to say the least, but
yeah. And and that's and once again, right? Like that's completely fine. The more we can be comfortable with not needing to put on trades, the better. You know what I mean? The more we can learn to be okay with not, I need to put on a trade. I need to do X, Y, Z. I need to, it's going to be fine, right? So, yeah, that was Wednesday. We're going to go on to the next day.
Yep.
All right, let me see here. Let me set up these levels. Now, before we go any further, I just want to point something out here, which was very beneficial for me. It was, Thursday, Wednesday. So after Wednesday was right here. Okay, so going into Thursday, this 430 level was starting to be tested a lot, right? And once again, we're using.
Can you zoom in a little bit?
Yeah, hold on. Let me just set these levels real quick.
Right.
Now, what I want to point out here is the 1 hour time frame. Once again, is going to be your best friend. It's one of my most powerful tools as a trader. Is the 1 hour time frame, right? We always talk about structure. We always talk about critical levels, right? And the levels are literally just structure. Whoever's defending them, we trade with them. We're looking for structure to form on the 1 hour. We're looking for it to form on the 5 minute, 2 minute. This is how we understand who's to control. So on Wednesday, right here on Wednesday, we started to come down and touch this 430 level. So in pre-market the next day, we're opening below it, and it's starting to give some significance to that 430 level. So I just kind of wanted to point that out before we go any further. We had our eye on previous day low. Let me label it. Because this is how, and I really want to go through this a lot more so traders can understand because like when I do a recap, right, obviously hindsight's 2020. We could sit here and be like, oh, that was the best. But what I like to do is really show you guys like how I think before the day begins, right? So I'll use the 1 hour time frame. I'll label end of day, previous day low, previous day high, and then I'll notice this structure here at 430. I'll play two scenarios in my head. I'll be like, okay, if sellers defend this level, where's my next, like based on the 1 hour time frame, where does it make sense price is going to go, right? It'll be like, okay, 426, that looks good. And then obviously this would be the next market imbalance or maybe some spots in between. So this is like, if we snap 430, these are my downside targets for the rest of the week, right? And then, I mean, you can see the rest of the week, we actually, pretty much almost hit them. So it's just really important to keep that in mind. Like before you know, like as the day goes on, right? Because 4:30 here, the day opens. Let me find end of day, which was it was actually right there. So I was very close in taking longs this day, targeting previous day high, like extremely close. But I wanted to see buyers defend this open right here, open print. But I was super biased on longs. I was like, if we, 430 was defended pre-market, but then invalidated. I was like, buyers really are showing up. I think they like it. But once again, remaining objective and not subjective, being, okay, what do I need to see presently to feel confident putting on a long play? And for me, that was, I wanted to see the open be held, and it couldn't, right? Price ripped right into the open. And that candle right there told me a lot. It told me that sellers were there. The volume really kicked up, and then the massive move right off it, and then the break and retest off end of day, and just the beautiful move down there to previous day low. So once again, that open, letting structure form around the open has helped me tremendously, right? And when it gets rid of that, like, I need to figure out what's going to happen in the first 5 minutes, right? Like, no, we don't just rush the move. We're calm. We're disciplined. We wait for structure to form, and we go from there, right? We don't take it short right here, like when it's 3 cents away from the open. We wait for price to react at the level, and then make the move. So,
Did anybody else notice this tiny little head and shoulders forming? It's hardly even large enough to call it a head and shoulders right at the open. Yeah, right there.
Yeah.
Yeah.
Kind of right there. It's pretty small, but I saw end of day and I saw pre-market high and I saw weakness at both of those levels. And that's what eventually made me take this quick little short here.
Mm-hmm.
I didn't hold it very long just because, it was CPI day, but that I did see that, and that was a certain level of importance.
Yeah, 100%. And then what's really cool here is, so after that trade, it was pretty much like I wanted to see. I held this all the way to, I was trying to get pre-market low. So holding trades is something I've been working on. So like regardless of the environment or anything, I just want to train my process. So price ripped in, short play, and comes within pennies of pre-market low, and I actually ended up stopping out on this candle. So, and then after that, I was like, okay, like what I liked about this day, right, is Powell spoke at 12, not 2. So this really opened up a lot of opportunity for us, because once he speaks, the volume goes through the roof. And when he's speaking at 2, we usually have to wait until 2 to see this volume. And I was actually getting extremely bullish. I wanted to take a long play for whatever reason, like right around here. And I'm like, no. I'm like, Powell's speaking at 12. I wrote in the Discord, I'm like, I'm not making a move until 12. It is what it is. And that kind of held me to standard, right? And I was like, okay, I told everyone I wasn't going to make a move. I'm not making a move. And then Powell spoke, and price starts to rally, right? So once again, going back to the objective state of mind, right, where I'm not going to know what happens until I see it. Price came down, tagged previous day low. I don't see this candle and go, oh, I'm just going long, right? I'm like, no, like let's wait for something to happen. So what was really cool here is I used the 1 hour time frame to identify what a bearish day would look like, right? So once again, break and retest, 1 hour time frame. Market looks like this. I'm like, okay, if we can get a retest at this 432.50, right? If buyers defend this level, I'll target previous day high. But if they don't defend this level, I want to see pre-market low or maybe even 4267 or 42627, right? So that was my methodology going into it. And then this happened. And now this is going to kind of, this is a perfect example here of no retest, right? So and what I do here is I'm painting two different stories. I'm going, if buyers defend this, right, I want to go long. Now, there's a structure's forming, but notice we didn't get that clean retest here, which symbolizes sellers stomping out of their trades. So we didn't get that. So instead of thinking long, I'm going, okay, there's a lot of traders chasing the market right here, and they think they're impatient, and they think this thing's going to rally just because they've seen some green candles. I'm like, what happens if this gets invalidated, right? Because I was using this on the 1 hour time frame to paint bearish market conditions. So I'm like, okay, there's a lot of traders that think we just broke this and held it, because I was thinking that. So I was like, okay.
Okay, go ahead.
Yeah, so I'm like, okay, what if this gets invalidated? I was like, okay, if this gets invalidated, I'm gonna go short. Once we ripped up, and then the red candle, like just like Todd said, once we shattered below this, I then put the trade in and put my stop loss in as close as I could. I put it at 30% of the amount of contracts I bought, and we got this beautiful move to the downside. And this right here was just a perfect example of how to trade the 1 hour time frame, and ripped right into low of day, hit that pre-market low, and then I ended up getting out of the trade once we broke structure right here.
Yeah.
And then it actually,
I was asking a question that day, Josh, like, of course Darren answered that, like, you looked at it in 1 hour time frame and you got shot, like, the switching the mind at 4-3 to 5-8, switching, when structure broken, like, you switch the mind to shorts.
Yes,
that is great.
Yes.
So, and because until just a minute back you are a bullish, and you are switching your mind completely opposite to bearish.
Immediately.
Really, I didn't take the trade, but I was asking the question, like, how did you, what made you to take the shot?
And that's the goal here, and it's really cool. So the less significance and importance that we can put on every trade, the easier it's going to be to do this, right? Like going back to like what Darren said, and what we're always talking about is the less we need this trade to go in our favor, the more it's going to go in our favor. Like we always use that analogy of the hunter in the woods, that there's two hunters. One has 10 deers in his fridge. He's got food and he's got, bullets. So he's not going to shoot at the first deer he sees when the weather conditions are terrible. Instead, he's going to be patient. He's going to be objective. The other hunter who's got no food in his fridge and he's got, 10 bullets, he's going to see that first deer and he's going to shoot it because he's subjective. He needs it to happen. Now, okay, I get that, Josh, but I'm a growing trader with a small account. How do I become that hunter that has food in his fridge, right? Like, and I can't help but say, you need to trade X amount, like you need to have a certain amount of money in your account. If it's $1,000, and you're trading one contract, you can take 10 trades. If it's 500, you can take 5 trades, but you have to be completely just okay with that trade going against you. And you know what I mean? And it's a skill. It really is. It takes time. I'm still working on it. I'm not, we're far from perfect, but at the same time, it's a characteristic trait that I know has a lot of importance. So I'm trying to achieve that, right? And I think a lot of you guys know that's where the meditation comes in, and actually visualizing yourself, that person, meditating on it, and because your brain really doesn't know the difference between meditation and the real thing. So really cool. But what I love about this trade is then it came back up into this 43232 area, right? Head and shoulders. We took the market short again right here via HPT pattern, and this was another slam dunk trade. I took it down. I ended up stomping out on this candle, this large green candle right here. But it was still a really good, almost $4 move. So this day,
Another thing I want to say, Josh, about that short is like what allowed me to switch up my mind so quickly was I always like to think of where in this scenario I was watching the 1 hour chart like a 5 minute chart or like a 2 minute chart. And in my mind, I was asking, where does price have to go to invalidate this bearish break and retest, and to make me switch to play longs at that level? So you always have to think about, like, where will I abandon this bearish strategy and pick up this bullish chart pattern? And for me, I use zones in a way, so I'm not looking at like specific price levels. And I know even though Josh has a line drawn on his chart, he looks at the price action around that area. He's not married to what happens, with the specific candles around that area. He's just looking to see what happens around that area.
Yes.
So on your charts, if zones work better for you, use zones. But the most important thing is to figure out a specific level where, if broken, now you're switching from bearish to bullish. And if that hasn't been broken, then you're good to go on your short play. And if it is broken, you're good to go on your long play. And is there a perfect level? No. You just have to figure out that perfect level for you. And the best way is just to start exercising that muscle of perception, like I mentioned last time.
Yeah, it's like these lines, these zones, whatever we use, it's to do one thing: understand market conditions, understand the story. Who is it? Buyers? Is it sellers? Right? Said it perfect. It's never a specific level. It's never a specific number. But the reason why I use numbers is because whatever happens around this, right? Just like Darren said, it paints a story for me. It helps me understand 90% bearish, 10% bullish, 90% bullish, 10% bearish. And then we just put on trades based on who forms structure at these areas. And that keeps me in the present, right? That keeps me in the present moment. That keeps me from trying to predict, right? Oh, well, if this holds, then this. If this or buyers showed up very well yesterday, so they're going to show up today. Or 3 green candles are in front of me, so it must be bullish. No, it's like, okay, whatever happens at this level, right? I'm going to then put on a trade and put in my stop. So, and then what's really cool is when the exact same strategy presents itself again, and then you're able to be like, okay, well, we ripped into this level. We're getting a head and shoulders chart pattern, which is a bearish chart pattern, which represents human behavior entirely, right? So for whatever reason, a lot of selling's going on at these 3 points. Buyers are trying to show up. They can't hold. What do I need to see to go short? And how much am I willing to risk? Which is very important, right? Like, we were talking, like, the more significance you put on the trade, the harder it's going to be for you to remain objective. Instead, you're going to be subjective, trying to predict it, trying to, condition yourself to avoid fear. You're gonna be all over the place. So, it's a really good trade. Went perfectly. I should have held through this, but at the same time, the way I was doing it was structurally on the 2 minute. So you know what? I stuck to my process, right? And that's a win in my book, right? So, and I can't.
Anyway, I took one trade there, like 4 to 9, like it was consolidating, right? Like 2 downside.
Oh, nice. Yeah. So and now
when it is broke like 42915, I win this trade.
Well, once again, you're identifying who's in control, and you're capitalizing on it. That's it. Like, and that's just what I love about our strategy is like our goal is it's not to be right. It's to understand who's in control of the market and put on it and make money off it. Like when I see myself in the future as a multi-million dollar trader, I don't visualize that I'm right every day. I visualize that I'm able to understand the story and put on risk. Understand the story, put on risk. And if I'm wrong, so be it. On to the next. And as I go forward in achieving that state of mind and those characteristics, I find my results in trading are just getting way better. I'm seeing way more consistency when I am just in the present moment, right? Like just completely mindful of these levels and who controls them. I struggled for a long time with predicting, and that's why I go so hard on it, guys. Right? Like I struggled years, like years, 3.5 years, trying to predict, trying every strategy out there. You know what I mean? So I get it entirely. Oh, dude, Friday was just such a good day. This was such a good day, guys. And I just want to dive right into it. So basically, I mean, so once again, 1 hour, like Darren said, looking at it like the 2-minute chart, right? If this is a 2-minute time frame, we have validated bearish conditions multiple times, breaking levels, making lower lows. Next is making higher lows. Next is a lower low. Based on structure, if 42547 breaks, we could see 420, 421, 22. And that's how I literally looked at this trade. I was like, okay, if this little swing low at 42550 cannot hold, if buyers cannot hold this, and large money, I even put this in the pre-market plan, and I said, if large money, unless they decide to pull the okie doke, which they did, this is what I call the okie doke, by the way, just so everyone gets a visual. This is the okie doke. When previous day low is right here. This is the okie doke Tuesday. When previous day low is defended, this is the okie doke. This candle, boom, right? So, I was like, unless
fake out,
the false breakout, the fake out, tons of So I'm like, okay, I had that 425 level, which was being respected pre-market. So it kind of gave it some significance. So I was like, okay, if once again we have end of day, previous day low, previous day high. So I'm like, okay, if buyers defend this and we can get above previous day low and end of day, I am completely open to going long, targeting previous day high. Like that's our bread and butter. Once again, sellers are going to get trapped here in a bullish scenario, and it's going to provide massive amounts of liquidity all the way up to 43255. Boom, perfect. Bullish scenario down. So like when the market's extremely bearish, I want you guys to be able to still always come up with a bullish scenario, because what that does is it's going to open your mind up to that possibility if and when large money does play the okie doke. So it's really important to, I know I always talk about it, and I know you guys know, but just the bullish and bearish scenario it's critical to remaining objective. So it was really cool how this day played out, though. And I'm gonna whip it out on the 2-minute time frame. So right here we have open print, right? So every day when we have open print, I label open print, right? I go boop, right? And this keeps me in the present moment entirely. I change this to OP, and then I make it yellow so it has significance. So we sell the morning starts. I'm going to get rid of pre-market data on this one because it just kind of, at least for the first trade. So it opened. I love days like this. So it opened, and then we kind of consolidate right here underneath previous day low. This was almost a short play, but the reason I didn't take this short is because the open wasn't defended yet. No structure was formed off the open. I want everybody on this team to get to the point where we don't take trades unless structure's formed off the open at least. Because chasing these out the gate, usually, yes, maybe 1 out of 10, 2 out of 10 will work for you. But it's just much better to be patient. Let the market play out and form, right? Like, don't just assume just because this is a beautiful little like retest off PDL, just wait till somebody pays for the open. That's like the way I look at it. Wait for somebody to put money on the line. Wait for the battle to happen, and wait for that story to be painted. So we rip past the open, and now I'm looking for a clean retest off the open to validate bullish conditions. Kind of get it, and then we rip into end of day. Now, this was really cool because then we ripped into previous day low and buyers showed back up. Now, this presents a beautiful opportunity here because we're like, okay, there's 2 scenarios. One where we break end of day, or 2 where sellers defend end of day. 1 or 2 are going to happen. And we come into end of day and we get selling, right? Now, I missed this. And I missed the end of day entry because I've been trading SPX. And check this out. SPX here has end of day at 427. It was 4278. So check this out. So this is what end of day is at on SPX. Notice we did not touch it. Now, do I let this completely throw me off? Absolutely not. Instead, I go, okay, end of days defended. Where could I enter next, right? And then we snap below previous day low. We come up for the retest. SPX did it perfectly. Took the market short, and this was a beautiful trade. This was super lovely. I mean, sold off right below pre-market low. And my downside targets, once again, were, let me see, they were much lower.
I had 420.80.
Yeah. Yep. I had, well, and you know how else I do this, guys? I'll pull out the daily time frame. And now check this out. When you have the daily time frame, I'll take the opens off the candles here. Like if I have very far targets, I'll use. Notice how I'm grabbing the open off this candle and that candle, right? So that's super significant to me. I'm like, okay, obviously I want to see 420.23, 420.60, right? Like obviously those are good targets. Market looks like this, right? I'm going, okay, I want to see 421.91. Okay. But then again, like using your structure is going to help so much. And now look at how the opens off that candle were respected perfectly. Like that's wild to me.
Oh wow!
See that?
I didn't even see that. I just saw all the way down. That's amazing.
That was one of my first. So I was, because what was going through my mind here was if we cannot hold previous day low. I mean, look how simple. So this is our strategy to a T. If and when, this is the daily time frame here on the left hand side. If and when sellers defend previous day low and end of day here, we're gonna get a sell off all the way down to where, right? And then I'm like, okay, we got to open here and an open here, right? Okay, that's some significance. Using the critical levels from 10.4, 10.5, and 10.6 for targets. And then, I mean, that was a perfect hit all the way down to the T. I did not hold my trade that long. I wish I did. I had to go get a haircut and I had to go leave. So I ended up taking profits on this candle here, still locking in a beautiful trade on off of previous day low. So that was
if that's not an example of how to follow the daily
frame.
candles, I don't know what is. Like that is the essence of our strategy with pulling targets off of these candles. That's just beautiful. I didn't even realize that the open of that big daily candle was the reason we were doing that inverse head and shoulders. I ended up taking that inverse head and shoulders just up to pre-market high, but I mean that's amazing that that it lined up
to
there.
a T, bro. And look at the volume. I mean, bro, it's like, you know, we always talk about our critical levels, right? And I'm not sure everybody on this webinar has had the one-on-one yet. So I just want to really flesh out where this strategy came from. And it came from the daily time frame, because we're intraday day traders. So I was like, if I could figure out a way to understand who's in control, because look at every candle usually retest the open and end of day in the highs and the lows. So if and when we're starting to move down, notice we break the open here, right? Sellers at once defended this open and this previous day low, and it came down all the way to this day's previous day low. So now buyers showed up, defended this end of day, tagged this previous day low, and then sunk. And then once this candle sunk below its previous day low, it dropped all the way down to this day's previous day low. So now I'm like, okay, so if I can see this on a daily time frame, how can I see this intraday? And literally, this is how we do it. We just label them, and however price reacts at these levels, we then put on risk. And this was a perfect example of it this day. I mean, look at this. End of day here is the closing price of this daily candle. We wick right into it, reject, sell off below this day's previous day low with volume. I mean, it's very clear to see a move all the way down to 42195. And now that you guys are aware of this, the next time you enter a trade short up at end of day, it's going to be like, dude, there's no reason to get out of this trade. The market imbalance is all the way down until 42195. Like, you know, yeah, I may be up 100% right here, but based on the strategy, there's no reason to get out. So what do I need to see, like Darren said, to either stay in this trade or get out of this trade? That's like my methodology. That's how I try to approach every single trade.
I want to add something about these daily candles, because we know, and we've seen in the last 2 weeks, we've seen a lot of chop in the market, and a lot of price action that we view on the 2-minute chart and the 5-minute is just noise. A lot of it is noise, and if we fixate on it, it's just going to confuse us. It's not telling us anything really important. So the question is, where can we focus our attention to price action that actually does help us tell what's happening in the market? And the answer to that is look at price action around open, close, high, low. Focus your attention to what's happening around those levels and let everything in between there just be noise. You can see it chopping around, but it's not important to your analysis. And so you can watch price action just jump around between there and not let it affect you.
Yep.
And then you can wait until price action comes into one of those 4 key levels, and then you can use that information to tell you conditions. And then you're not confused by so much price action. You have to, single out specific areas that are actually useful to your analysis.
Yeah. No,
Definitely.
100%. It's, and one of the main things, right, when I was struggling as a trader is I kept just pulling triggers on random trades, on random places. Using these levels, right, is just going to it's going to increase your criteria, and it's going to keep you from making irrational trades, right? It's going to keep you from making unlogical trades, right? It's like, hey, I'm going to trade these levels, and based on what happens at these levels, I mean, it's just so, like, look, price, we get a beautiful double top. We get a clean retest. Now, once again, let's not put significance in the price action Let's put significance in the chart pattern around these levels, right? Because that is the bank's behavior. Because our goal is to understand what large money is doing and just ride their back. That's it, baby. That's it. Like that is my goal every day. Is it always going to be perfect? It's probably never going to be perfect. I don't want it to be perfect. I just want to know who's in control and put on risk. And yeah, that's it right there, guys. It's and then price came right into pre-market low. That was a beautiful trade right there with conditions.
Yeah, absolutely perfect. It tagged it.
Yeah,
tagged it perfectly.
I actually made a mistake on this trade, which is completely fine. I traded Qs, ripped right into pre-market low. This is the definition of just once again critical level. I took the market short right here, and my stop was right above this candle, way too close. As you can see, ripped right into it. Bing, stopped me out, and then a beautiful move to the downside happened. And was I upset? Not at all. Honestly, one of the main reasons I wasn't upset is because other traders on the team cracked this, and that made me really happy. It made me very happy to see people trading with conditions. I mean, look at that. That move's beautiful right there. So it's gonna happen. What do we say, Darren? I'd rather take a small loss. How do I say it? It's good. I would rather take a small loss than I don't know. I just you remember what I said?
Yeah. So small losses. Small losses break even. Large loss.
Yeah. Yes.
A large win, small win.
Yeah.
Never a large loss.
Yeah. There's four.
I don't know if that's.
There's 4 outcomes. You could win big, lose big, win small, lose small. As long as you never lose big, you're good. I got that straight from Todd. So
yeah. So Josh, if I can we go over Friday? On the future. I want to show you kind of what I look for almost on a daily basis
on ES.
But on the ES, we're right at the open. We're coming into that 4,300 level, and that's on the futures. When you come into a whole number of 300 or 50,
yeah,
you can then play off those.
Oh, really?
And we came down, and we couldn't make a higher high right at 4,300. So that was kind of an HPT pattern right there, and that's where I took it.
Oh, 100%. Yeah, look at that.
When you come in these 4,300, 4,200, 4,400.
Beautiful. Yep.
Yeah, I like to play 100 to 50s on the futures.
And
it's funny because that's the exact level that it got hung up on before. Like all the way back beginning of October, it was hung up at that 4,300 level, and then it actually retested it, I'm seeing. Definitely. So, yeah, it definitely had action around that level for sure.
Well, what I love what Todd's saying here, he keeps it so simple. He's not seeing a higher high. So if you ain't getting a higher high, you're probably getting a lower low. That's it. Boom.
Lower low.
You know what I mean? Like it's so, I love the simplicity because that is critical to longevity in the market. Is the simpler the better. And once again, what's he doing here? He's just understanding market conditions. He's going, okay, if this level, if we cannot make a higher high, we're at least gonna see down to the lows. And then based on if you whip out a larger time frame, it's like, okay, wow, futures actually hit the whole rip. It's like, okay, then what are my downside targets, right? We always talk about this. If then, right? If this happens, then what? We got this level. 4,300 was critical. Look right here too. Actually, 4,300 was our level we played on SPY. What level was it? Hold on. Last week, when we were playing bullish market conditions, we were like, okay, if let me see here, I'll tell you. I think it was 40.
I think that was Friday even that it. Oh no, it couldn't have been.
This level right here, 425. So yeah, that's the same level right here. So like when structure was established here off 425, right? It was we broke it. We accused actually retested it. You can see here on the futures, it was completely retested. Let me pull up pre-market data. I'll show it. Yeah, perfectly. Look.
Yeah, it was retested in pre-market.
Yeah. So retested perfectly. So the same exact thing here, right? So prices defended beautifully. Buyers defending this level. Now we've revisited this level and sellers overwon it. So you got to ask yourself, what goes up has an equal and opposite force on the way down. It's just the law of the universe, right? The Newtonian law, at least. And now price breaks 4,300 and we get an equal and opposite move to the downside. So use this right now. So when you're trading, you're like, okay, if Todd's going, if we can't get a higher high over here at 4,300, we're taking her down at least to 4,258, maybe even 4,250 or whatever your profit margin is, right? So I love the if then statements. It's critical. It's simple. It's if this happens, then this. It's not, oh, I need XYZ to line up. I need 4 different, like, no. Keep it as simple as possible. We are very simple creatures. We don't like complexity, or, you know what I mean? We're very simple, because if it's simple, it's extremely repeatable. So, but yeah, guys, that's pretty much it. Does anyone have anything else they want to run through before we call it a day? Boom. All right, perfect. Listen, guys.
That's good for me.
Yeah, good, great day, great week. Let's go into the next week with the confidence, with the control, with the conviction. Any questions, feel free to message us. And everybody have a really good weekend.